The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, boys and girls, looking good. Billy Ray, feeling good. Lewis, a Merry Christmas to all, and to all a good night. Let's take a look here at some of these things. We have to put our hats on today for our little jack-o'-lantern in the room, Mr. P, who called the top in that crude oil, at least temporarily for sure, at that 58.07. And unfortunately, he missed it by 11 pips, which I think was a pretty good deal. We'll have to keep an eye on that to see if it's going. Hold on one second, folks. I want to put the chart in. I thought I'd posted it for the DAX, but evidently the technical gods were not smiling this morning. We'll get this up here and take a look at it. There we go. Okay, you can see that. We pulled down to 61% retracement today, had a little bit of a bounce, much like we're doing here in our market, following the tax plan. It looks like it's come through, but we'll watch this. The next one we want to take a quick look at, we've got a couple of markets that are in getting ready to do something really big. We'll cover those in just a minute. Well, that's my opinion. All right, here's the DAX. We'll get this up so we can take a look at it. And then I had a couple of questions that people asked me about. You know, there's the DAX that we're looking at. One of the questions was, what was the most exciting time that I ever had in trading? I think number one would be the one where the Iranian jets hit the Iraqi power plants back in 1980. I was short gold. It was supposed to go up. It went down. But another one that was just as big was in late 1975. I had not been trading for well over a year, just learning because of all the mistakes that I'd made during 1974. And we got a caller in. Let's get the caller out of in our crosshairs here. We've got a caller from Dave in Clearwater. Dave, are you there?
Morning, Larry.
Good morning and happy holidays to you, my friend.
Same to you, and Merry Christmas to you and the whole Pesavento family there.
Thank you. What can I do for you, buddy?
I was wondering if, because I'm looking to kind of broaden my horizons here a little bit out of the S&P and nat gas and copper and oil. So I've been looking at the Treasury notes because of tons of liquidity, and seems to hit the Fib numbers pretty regularly. So it's looking like, I don't have the chart in front of me at the moment here. I have to step out for a minute. But it looks like it just finished, broke down through its trading range, finished the Fibonacci sequence down. So it looks like, with the potential rise in interest rates, it looks like it's, the deal's going to be sell the rallies. Although for whatever unknown reason with higher interest rates, looks like the dollar's not moving higher, which is kind of odd. But be that as it may, it looks like it's a sell the rally, and I was just curious for your thoughts and what your trading thoughts were and what plans you have for the notes.
Sure. Okay, first thing, Dave, I'm sure you're aware of this, but Treasury notes is the largest of any of the commodities that we trade. It's about 6 times bigger, I believe, than the Treasury bonds as far as the open interest, but the Treasury bonds have greater volatility, i.e. greater profit potential. So I hardly ever do anything in the notes. They can move very, very slow, but slow can be good sometimes. But the overall trend of both of those, of course, will go together. The notes are going down faster, i.e. shorter rates are going higher than the longer rates right now, and that's why we're seeing this big, move down. Two things. One is I would suggest you look at the Treasury notes and the Treasury bonds, because the Treasury bonds, they trade a little bit differently. They're a little bit more volatile, but they are definitely falling off the numbers without any trouble at all. And so I would, watch that. See, I have a problem with the Treasury notes because, it might take them all day to move $300. On a big day, they might move 500 or 1,000, where the Treasury bonds might move $2,000. So you just want to basically not worry about how much money you're going to make, how much money you have to lose, to see if you're right. And now with the market, where it is now, I would definitely look at the Treasury notes, because they are far less risky than the Treasury bonds are right now. So that's what I would be looking at. I hope that helps, but I don't do much I don't do anything in Treasury notes, but I do watch the Treasury bonds quite a bit. In fact, just give me a second here, and I want to chat a little bit about that. We might as well use that as one of our first things that we're going to look at this morning. And the only question is, where did I put it? And therein lies the rub. Shut the front door and raise the rent. Dave, this technical part of this business drives me absolutely up the wall, and I can't find the darn thing now. What did I do with it? Oh, brother.
But if
anyway,
you got a bond chart ready to go, that's cool too, because I'm not just looking at just the notes. I'm looking at notes and bonds, but I just had notes on the mind when I was calling.
Here's the one we were looking at as a Monday, but this is Thursday. But we were thinking we could get a rally up here to this 155 level for a sale, but we never got that. We only got as high as 154 and change. And if you look at this chart, we're down here at 150 now. We've dropped 4 handles already today, and that tells us that we're getting ready to match the old low down here in October. When we break that out. Now, if we break that low out, pay very close attention to that low, Dave, because that's a 61% retracement on the weekly chart. So that should give some type of a bounce right below 50. But the target on this is 141 on that ABCD move. So this has a long way to go. So I would be looking for ABCD patterns, on the half-hour chart in the bonds, to put on a low-risk short.
Gotcha. Okay, cool. Awesome. Thank you so very much, Larry. I greatly appreciate you and the entire TFNN team, Tom and Steve. And it's been a while since I called in, but, I'm still tuning in the program and enjoying it, man. It's really
I've enjoyed talking to you over the years and meeting you, and Tom O'Brien has put a great group of people together. Every day when I'm in here, I'm amazed at the trades that are posted in here, by some of these folks, and they do a great job of giving people a little bit of an edge. And when they're wrong, they certainly red flag it and say, hey, I'm wrong on this one, and they move on, and that's what you really have to do.
Well, absolutely, and to my way of thinking, there is no wrong. There are only probabilities and defining your risk. And once I think someone comes to that realization, it's just it's a game of probabilities. And as long as your risk is defined and your risk rewards are in line, at the end of the day, you'll have a rising equity curve. And if you don't, you won't. It's in my mind, it's really that simple. It took me a while to figure that one out, but now that I've figured it out, my trading has improved quite a bit.
Yeah. Well, listen, thanks for calling in, my friend. And again, happy holiday, Merry Christmas to everyone, and may God bless.
May the good Lord bless you as well, Larry. Thank you so much for taking my call.
He certainly has. Thank you very much, Dave. We'll talk to you later, buddy.
All right. Bye-bye.
Okay, we got a break coming here. When we get back, I'll go over the exciting time that I had. I've had a lot of them over the years, but when I was thinking, anyway, we'll get back to this. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks. I'll finish that story a little bit later. Let's cover this Bitcoin first. A couple things happening. If you notice here, we had this move that stopped right at the 15,800 level. We rallied up to 17,000 and change. Now we're heading back down again. Folks, that last rally that we had was right at a 382 retracement. So this is the first indication that Bitcoin is going to be in for a much larger correction. Now remember, we started watching this back when it was around 5,000, when we were first had John Jameson on our program. And we went from 5,000 to almost 20,000, so that's 15 points. So you could easily get a 61% retracement back on that, which would, make it drop. Whoa, that would only be about 8,000 points down. So there should be some pretty strong support at around 12,000. 11 to 12,000 in Bitcoin. The reason why we're following it, folks, is it's something that is starting to get some play. Now, on Wednesdays here in Tucson at our little Indian casino, they have a Texas Hold'em tournament where you buy in for $40. There's 50 people, and the first prize is around 1,800. But what's interesting is I'm playing on the table yesterday, and somebody mentioned that they were in Bitcoin, and I thought, well, this is gonna be quick. I couldn't believe how 4 or 5 players on the in the game. Another one was also in Ethereum, and another one was interested in it, and another one was interested. That's all they talked about for 45 minutes, and there were 6 or 7 people there asking questions, and I mean, it's almost like the .com bubble, but I don't know what it means, but it's starting to get some play. So that's the main thing that what we're trying to do here is to follow the technical aspects of this chart. But I think the Bitcoin, this is the first indication that we've had a possible move. Now, if this market doesn't take out the low at 15,800, and starts to go higher, this would be wrong. But right now, I think we're ready for a really good correction here based on that chart that I just posted. You see that was a huge ABCD structure that finished, and with the market as volatile as it is, we should get a pretty good move to the downside. But we'll be watching it much like we always do. Two questions. First, I'll answer the first about the Elliott wave. The reason why I am not an Elliott wave person, folks, is John Hill introduced me to the Elliott wave in 1970. And I had a very as did John, we could never understand whether it was a 3 or a 5 or a 2 or a 4. And I basically said, well, look, if I look at the ABCD structure and I measure price and time within that ABCD structure, that's going to give me a pattern that I'm able to trade, and that's what I was looking for. So I really don't count the waves. Basil Chapman does as good a job as anybody I've ever seen. Bob Miner is also good, but the best Elliott wave person that I ever met, of course, was Bryce Gilmore out of Sydney, Australia. But that it's just a difficult thing for me is to count all these waves and the extensions and the throwovers and all these things, and that's what makes it a little bit different to count. As a matter of fact, we were looking at this Elliott wave chart just the other day that came from Bob Miner, from Bob Prechter at the Elliott wave, and you'll notice here that when they count these things, and they're looking at these extensions that go up, and how do you know whether it's a 3 or a 4 or a 5? You have to remember now, when Elliott did this back in the 30s, he did not know about the square roots of the numbers, 0.786 and 1.27. So that's another reason that I think that, I'm sure it works for a lot of people, but, I just look at the patterns. That's really what I'm looking at. So we'll just go on to there. Back to the question about being excited on something. It was 1975. I had not traded for about a year, and I had been looking at the price chart of soybeans and soybean oil, and I had found a huge Gartley in the soybean oil and in the soybeans. And two of my mentors, Dave Nelson and Oscar McClure, both of those guys were fundamentalists in beans, and they were explaining that this, because of the El Nino climate that was going to be coming, there's a possibility that we could be looking at drought conditions into the summer of '76, and the best thing to do would be to look at soybean oil. And the reason why is the soybean oil was at maximum carrying charges. In other words, if you bought long July soybean oil and sold December soybean oil, you had no risk involved, because July was selling at a huge discount to the December. It was like what they call the old can tango. Anyway, that was stretched out as far as it could get. And with interest rates as high as they were, the only risk that you had is if interest rates went a little bit higher, the carry could go a little bit higher, and the spread could go a little bit against you. The other thing that was really interesting about the trade was the price was so low in soybean oil at that time. It was only there was the margin on the oil was only I think it was 100 pips, which is $600, and that was the one that was the mace one. Well, I'll answer the other question. He's asking me the most. Hold on, I'll ask her that. Let me finish this story, and then I'll answer the other question. But the spread only cost about $600 to put on, so your maximum risk on that spread was $150. You had it for 6 months. And that was the most you could lose. And, I told everybody that I could possibly think of. Now, remember, I used to be doing a whole lot. And for the past year, after I'd made all those bad mistakes in the fall of 1974, I had to pay the price. And so that was my license plates, Mr. Z. I had soy oil written on my license plates. The problem was I was in California, and the problem was we were during that embargo for oil, and everybody think that I was talking about Saudi Arabian oil. So I had to change I had to get rid of my license plates because everybody thought that I was, and they were not trading crude oil at the time, but I'm getting off the beaten path. Anyway, let me tell you the exciting part. It was one Friday, the spread was trading, I believe at, December was about, I forget. It was really big. It was about 150 points premium December over July, and the spread was just staying at about 35 is what it was. And in other words, I put the spread on at plus 35. Went on one Friday afternoon, right before the close. The spread popped up, and July went up 15 pips, and the December dropped 15 pips. So now the spread was trading at 65. Now that was a doubling of your equity. And the first thing that came across the Reuters machine was, this thing's not going to happen. This is going to be no good. It's going to correct on Monday. And on Monday morning, the market opened unchanged. So I still had that money in my account. On the close, bada bing, bada boom, another 15 points up in the July, down 15 points in the December. I'm long July, short December, so I'm making it on both sides. Folks, that worked for 3 months. I think it had 2 down days in 3 months. And that's the one that put me back in the game, and that's the one that got me my job at Drexel Burnham Lambert. So that was one of my bigger ones. The most I ever made on any one trade was in 1991 during the Iraqi War. I was long gold and I was short crude oil, and the short crude oil dropped $11 a barrel, and that was my biggest one. We'll be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, there was 2 parts of that last question. The most I made on one trade and what was the dumbest trade I ever did. No question about the dumbest trade. That was in the summer and fall of 1974 when I was averaging down on 18-day cycles. I would buy on an 18-day cycle low. It would rally 3 days and then go down another 15 days. So that was my dumbest thing, but it was also my smartest thing, because if I had not done that, I never would have really studied the Gartley book like I needed to do. It would, I wouldn't have been had the chance to go to work for Drexel Burnham Lambert. I mean, it was just a huge learning process. Trading is a journey, not a destination. Now, one other question someone's asked us here in the Dan, do I ever go all in? Boys and girls, there was a man named Amos Hostetler at Commodity Corporation. I'm fortunate that I met him in 1971 or 72 with my good friend Jay Cross, and he had a few little signs on his computers, and one of them was, don't ever go for broke. You just might succeed. So don't do that. You don't need to do that. Take little shots. That's all you have to do. You don't have to go for broke. There's always another trade coming around the corner. There always is. Even the ones that are the most dangerous are the ones you absolutely sure are going to work. That's the main thing, and who knows. But anyway, that's my 2 cents worth. So we'll see to see what happens, with that. Folks, there's something big happening in River City in our gold market. We want to pay very, very close attention to it up in here. Don't tell me. I had a power outage this morning, and I don't know if I got my gold chart in here or not. Doggone it. I posted it yesterday anyway. Well, here's the reasoning behind it. Let me just give it to you. I'll go backwards into this. Here's the silver chart on the daily. We couldn't even make a 3.8. Well, we barely made the 3.82 retracement by about 2 cents. We missed it by 2 cents. Gold has now rallied. It's rallied $33 and a half off the bottom. The harmonic number is 34. We're right at a major number up in here in gold. So I really expect the gold to pull back in here. Here's the $64 question that you have to answer, and it's always a tough one to do, and that is if you're long gold, i.e. that's what we are, from the 1240 level, and we're up 27 bucks. What do? Do you get out here and buy it back, and if it goes up, do you miss the move? How do you handle it? Here's the way I look at it, folks. We're coming into this holiday season. We've got a couple more days into Christmas Eve. This is the strongest seasonal that you can have in gold, and that's what we want to be watching. So we're going to hold that and see if it can pull back into that 1250 level. But if gold happens to get back below that 1240 level again, this whole bullish scenario on gold has got lots of holes in it. So the worst thing can happen is your break even. The best thing that can happen is it backs off to a 3.82 retracement, and that wouldn't take much to do that. That would only be, you're only looking at 3.82 retracement on that would be 13 bucks, which the biggest one we've had so far has been 12. So $13 coming off of the 72 takes you back down to 12.59. So you kind of watch that area between 12.59 and 12.55 in gold to see if it's going to bottom. That's the main thing that I'm looking at. Getting back to that question about Elliott Wave and the counting, just let me give you an idea here. This is a cattle chart that we've been watching for quite some time. I just wanted to show you. There's no Elliott Wave stuff on this because that's not what I do. I just look at the expansion numbers. But what I'd like for you to do is look at that bottom that it made at the 382 down there at 123. Then we rallied 3 cents. And all I did was I cloned that swing, that little red thunderbolt pattern. I cloned it. And you'll notice that it was almost a perfectly identical swing that happened in cattle. Now, you don't really need to count anyways, folks. Just look at this cattle chart. If you look at the low that it made back on the 20th and into November, and it rallied into early December, it rallied 5 trading days. So what did it do in December? On December the 11th, one of big Norm Winsky's big trend change day, it rallied 5 days. What did it rally to? Exactly to the same swing that it had made on the previous swing. So that's telling you that if the cattle get much below 118, we're trading a little below 119 right now, you're looking at a market that's going to be heading down to that 786 at 113 area where there's a big ABCD weighting. So that's what I look at. I mean, you don't have to worry about whether it's a 2 or a 3 or a 5 or a 4 or any of those things. That's neither here nor there. Now, I can't compete with Robert Prechter because he's a Menzies member, and he's got an IQ higher than what? Higher than the margin debt on someone short the S&P. Let's put it that way. Anyway, that's taken a look at. By the way, we hit the 61% retracement this morning in the S&P E-mini up at this 128 level, 128.15. But this is we're in a holiday spirit now, so you don't have to risk much if you're going to try to sell it there because it is a very, very low risk. The risk on that would be probably 40 Dow points up to the 78% level, which is 24,840, which is about 40 points from where we are right now. So those are that's what I would be looking at. All I can say about the stock market, folks, is we did top on the new moon and the Mercury retrograde that Norm Winsky had talked about. We did top on that day on Monday, and so that was going to be a very interesting one to really pay particular attention of. That was on the 18th, and today, by the way, is the first day of winter. This is the shortest day of the year. Right after this, we're going to be looking at longer days, and which is always nice. So, but this is the last, the first day of winter, which goes into March the 20th, and then we start the equinox. If you ever get down into southern Mexico, they just had a terrible bus ride down there, right south of Cancun, and that's where Chichen Itza is, the Mayan pyramids, and several people were killed. I've been on that bus several times to go down there and see that place. So it's way out in the middle of the jungle, folks. It's really it's quite rustic, as they say in the trade. But I've always enjoyed going to see some of those wonderful pyramids that Mexico has. Okay, we want to get down to a couple things about these Treasury notes and Treasury bonds. We had Dale Pinkert on yesterday talking about this from Forex Analytics. I want to bring this chart up because this is an interesting one where we are right now. This morning, the dollar index got a little bit low, below 93 level, 92.96. That was a perfect 61% retracement. That equated to the 119 in the euro. The euro sold off a little bit since that time, but the reason why I'm bringing this chart up is this is really unusual, folks, to see the Treasury notes interest rates rising and the dollar dropping, because if interest rates are going higher, people want to get that interest rate, and so they convert their money into dollars to buy the Treasury notes and Treasury bonds to get that high interest rate. That is not happening. There's something amiss here. There is something really different in this chart. I don't know what it means, but all I know, maybe it's something that nobody knows. Who knows? All right, we'll be right back. 877-927-6648 if you want to call in and win a prize.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks. We want to cover a couple things foreign exchange related. I wanted to bring this chart up to you because we are very close to breaking out here on this weekly chart here on the Japanese yen. If you'll remember, back in 2011, we had someone in Clearwater, Florida. They're on Cleveland Avenue, named Tom O'Brien, that coined the term King Dollar when it was trading at 75. And folks, we went up for 3 years straight up. That high we made up at that 126 level was a 382 retracement on the weekly. Remember, this dollar yen used to trade at 360, folks. It went from 360 back in 1989 down to 75, and this is where we've been. And you can see here that if we come breaking out of here, if we get above this 114 level in the dollar yen, you're going to be looking at something that could have legs that would make it go a great deal higher. That last weekly correction that we had right at that 382 level was a spot-on 61% retracement of the low from 2016. So this is a potential for a very, very long-term trade, and that's some of those can, really be good. But it trades really, really super. It's just a super trading vehicle on an intraday basis or a daily chart too. It just got, well, all the currencies do, because they have so much liquidity in them that it really is really hard to beat them as far as a trader. Now, I have a question here about that. I just wanted to bring this chart. It was about the silver making a 382 retracement. If you'll notice here, I haven't updated this chart yet, but we've made just about a 61% retracement in the platinum from that last low that we had. We bottomed down there at 873. We're almost there now, so we're due for a correction. I believe that we've got a chance for a really big bull market in the gold in this coming year, but whether this correction comes or not, we'll have to wait and see. But we're just trying to see if it's going to to work out the way that we think it's going to come out. We have a question here about the gaps in the Dow Jones. Let's just bring these up here. This is as of we have one other gap, but it was filled this week. That was the gap from Monday when we had the new moon. But if you take a look at I'll cover the grains in just a second. Marshall, just give me a second here, and I will cover the grains. But you'll notice here that we've had this tremendous move since August. We've left 1, 2, 3, 4, 5, 6. 6 gaps are unfilled. This last gap that we had there at we didn't quite fill that one, so we have 7 gaps now since August. That's just an unbelievable time. And of course, the 1.618 measures to just under 25,000 that we almost hit. So we'll have to be able to see. Given the grains, now we've been saying for quite some time here that these grains have been in a pretty strong downtrend. They're coming into some pretty good support. We're watching the one that has had a great deal of interest to us, of course, was the wheat market, and wheat's trading at about the 424 level this morning, so it has probably made its bottom. I don't believe that the corn has quite made the bottom. I'm going to be updating all this for the newsletter over the weekend, and of course we're closed on Monday. So just remember that that's something that's pretty important. You can see here in the corn, let me just get this up here. You'll be able to see it without too much trouble here, that the corn could easily get down into this level here of the, we're trading there right now. We're trading around 349. The low has been 346, so we're getting very, very close to some of these things in here. I will tell you this, folks, there's not a lot of grain trading going on between now and January the 3rd. I can tell you that right now. Most of these guys are done. They have there's some spec going on, but very, very small amount. In fact, all the volume in these things start to go down. When I worked at Drexel, we hardly did anything in December. The old thing was if you hadn't made your money, by December the 10th, you probably weren't going to make any by the end of the year, but that's neither here nor there. The soybean market, to me, looks like the one that could have the biggest potential because we're so far above the prices of these things. I think if I can show you, looking at 2018 soybeans, if we can get this up here, I've only got January here. Let's just put this up here so you'll be able to see it. We're hitting these levels in January beans right now. We are down at the in fact, we're really close to the 78% level. We're not very far away. We're trading at 951, so we are very close. And of course, we had the new moon on the 18th. We're 3 days past that, so that's not working. That lunar cycle is certainly not working. So I can't do anything there because there's nothing else to. 949 looks like that could be the it for January beans, but if that fails, you could be looking at a huge ABCD down, and that would take you even lower. I don't have the 2018 November bean chart, Marshall, but I will have it over the weekend. You'll get it in your letter, so you'll be able to see it. But the time's not right yet. I mean, it's just the markets are flat. They're going down. The only ones that are having any volatility are we get a little volatility in stocks now. The bonds and notes are rocking and rolling. Crude oil is starting to move pretty good. The forex is always in there moving. So those are the ones that you want to pay particular attention to. I would focus on the foreign exchange first. Then I would focus on the gold, and then crude oil and the treasury bonds, and then later on the stock indices. But that's the way I would look at it. But that's my opinion. And remember, opinions are like armpits. Everybody has one, and it usually smells. So pay attention to that. The one thing that surprises me more than anything is what's going on with this U.S. dollar and the fact that the treasury bond rates are going up, i.e. bonds going down, notes going down. If you have to buy notes and bonds and you're a foreigner, you have to convert that money into the U.S. dollars, which should give strong support to the U.S. dollar, and that is not happening. This really means something, folks. I wish I knew more fundamentally than I do, because I don't know anything about fundamentals, but there's something wrong with that when you see that big of aberration in a market that's big. The dollar index stuff is thousands of times bigger than these stock indices and all the other stuff, folks. I mean, this is a huge market in foreign exchange. So something big is happening. I don't know what it is. Well, maybe it's a change in economic thought or something like that. I'm not really sure, but we'll have to figure out, what it's going to be. That's all I know. Okay. I will tell you this, of 100% certainty, tomorrow is the last day of trading for the week. And we will be closed on Monday because of Merry Christmas to everyone. And then we'll be back in business here on the day after Christmas was always a fun day to trade, and those first 4 days are still fun too. Okay, next I think that's about it. We got a break coming up pretty soon. We get back. I just want to review just a little bit about the about this gold market and to watch it very, very closely, because we've got something I think really big coming our way in gold and silver. And silver is actually probably something you might want to look at on an ETF basis, because doesn't cost much to get in here. 877-927-6648. Oh, brother.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. I wanted to take just a few minutes here to take a look at the gold chart. I believe I've got it right here. This is what we've done here over the last couple of weeks. This is you can see the 3 drive to a bottom pattern that we had back on the 12th, 1 day off of where we were with Norm Winski's thing. But then we had the $34 rally stopping right at, we went from 1238 to 1272. That's $34 in Annie's book. That's the harmonic number. And if we're really bullish, we're not going to get much below 1260. That would be down $12 from the high. That would be bigger than any correction that we've had so far. But there's also the possibility that we could get all the way down, another $17 lower here to 12.51. We could also get down to 12.46. Folks, if we go below 12.46, that's going to be so bearish on gold and silver and platinum that you just can't imagine. The ideal situation is it takes at least 4 or 5 trading days to form a beautiful ABCD pattern down here at one of these major retracements. And if you're really bullish, you'd love to see it at around 12.59 about the end of next week without much volatility. They're up and down. That means you're making a 382 retracement after a major 61% retracement on the weekly. That's where you want to take your stand. You circle the wagons there. Make sure you have enough water and provisions and ammunition, and make sure you can get out of that circled wagon if it's wrong, because you got to have a stop in, because we never know what's going to happen next. But it looks like the cavalry could be coming here. And I guess I've used enough metaphors today to end the show, but I want to wish everybody a Merry Christmas, which I'll do again tomorrow. And we'll see you all tomorrow on the flip-flop, and live every day in an attitude of gratitude. And may God bless, the words of my old friend Anthony Robbins. So, folks, that's it.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.